Hi everyone, it's Jeff here from the Systems Lab. Today we're going to talk about the Bitcoin halving that has recently happened and just take a look at what it could mean. What does it mean for the following year? What's happened historically? Um, and what can we look forward to coming soon? All right, so let's dive right in. I'm going to move pretty fast because we have a lot to cover. First of all, what is it? So it's built into the original Bitcoin architecture. This is nothing sort of weird or different. It's actually built into the system. The whole idea is to limit the supply of new Bitcoins being introduced, and those new Bitcoins are introduced when miners do all of the calculations on the transaction blocks, and they're rewarded with Bitcoin. The idea really is to fix the overall supply at a maximum of 21 million Bitcoin, and we kind of slow as we approach that 21 million Bitcoin number. Now, the last halving took place on the 19th of April, 2024, so not long before I'm recording this, less than 2 weeks. And what does it all mean? Um, Basically, the miners, like I said, are rewarded with half of the previous amount of Bitcoins that they used to get when they basically put a block of transactions through when they validate a block of transactions. So specifically on this occasion, what it means is that the miners used to get 6.25 Bitcoin when they would validate a block. Now they're only going to get 3.125, so half of what they used to get. That's why it's called the halving. When does this all happen? Well, it's pre-programmed. It's not done by date. It's done by the number of blocks validated. So it's every 210,000 blocks. But realistically, that's about every 4 years. That's what it's happened. That's what it's turned out to be historically. And if we look at the actual dates, I'm going to just put each one up here. You can see that we've had the first four have all happened, and that shows you sort of like the reward being halved. I mean, you used to get 50 Bitcoin, back before November 28th, 2012. So now we get less and less, and the next one is expected to happen in 2028, almost exactly 4 years to the date. And that's going to drop it again down to 1.5625 Bitcoin. Okay, now I saw this cool chart on TradingView, which gave me, an idea that I thought it would replicate, but I wanted to give credit where it's due. The link to that is on the bottom of the page here. Basically, he was looking at the performance a year before a halving and then a year after the halving. Um, and kind of looking at that and then looking at what could happen for the following one, the halving number 4. So I thought I would reproduce this, and we're going to look at this chart here, but I'm actually going to build it up from scratch, and it's only going to take a minute. But there's some important things that we need to consider. This is that same chart. It's Bitcoin USD. It's a 1 week chart. We're using Bitstamp data, and this goes back all the way to the little dinosaur, to the inception here. And what you can see is that towards the beginning, like for the first few years, it looks like nothing happened, right? It looks like it's just flatlined. And then all of a sudden it kind of goes crazy and the volatility goes nuts. Excuse me. Now, what's really, in order to make sense of this, what we're looking at here is an arithmetic chart, which means that each block is the same amount. TradingViews picked the amount based on the amount of data I wanted to look at, but you can see it's $4,000 for each one. So we go 0, 4,000, 8,000, 12, 16, etc. But what that means is that, way up here we hit 72 or so. It just kind of skews the chart a little bit. So when you're looking at long-term data that has large differences in price, logarithmic charts work a lot better. So we hit the little L here, and that switches the chart to a logarithmic chart. And now you can see that the numbers on the side kind of go up logarithmically or exponentially. So we go from sort of 0 to 2, 4, 6, 10, 15, and then by the time we're up here, we're at 10,000, 15,000, 22, 33. You get the idea. The blocks here are much larger changes in price, but overall, they're not as big, and it means that we can have a closer look at what's actually happening here. So if I turn my drawings back on, I've preset here each of the Bitcoin halvings, and then I'm only looking at a year after. I decided that the year before was less interesting, especially since where we are now. And the teal area is that 1 year after. The yellow area is the difference in performance that's happened over that year. So here you can see this was a crazy one where it's almost 9,000%. The following halving was more like 350%, not to be, that's not so shabby. And then there was this little extra extension bit here that we'll talk about shortly. And then the last halving was 620%. We had this nice move here, and that leaves us right here where we are today. And so we have 1 year after halving. We don't know where this is going to go yet. If we took a fairly conservative view and we assume that this is going to continue to go up over time, then 200% or just over would be, by far the lowest of all of these that we've seen so far. There's not an awful lot of precedent here, bear in mind. Um, and that would bring us from like 62,000 and change where we are today up to about 200,000, right? So that's kind of a large jump in price, but a smaller jump in sort of like performance change, like in percentage terms, right? So, even if we only did this much, 216%. There's a lot of price movement inside of that, and that means that there's a lot of opportunity for us as traders and as PRX traders. Now, I thought we could have a look at PRX as well. So for each of these yellow blocks here, what if we saw and had a look at how PRX performed over that period? So that's what we're going to look at next. So for each year following the halvings, here are the numbers as I pulled it through using the PRX system that many of you have access to who are, silver subscribers. You guys could rerun these numbers yourself. That first one, which was that 9,000%, difference, turned out to be the best, of course, right? So 116 R units, risk units over 9 trades, high percentage profitable, very high profit factor, low on the drawdowns and ridiculous on the expectancy, right? 13 R expectancy per trade. Not something that we would sort of forecast going forward, but not bad to see anyway. So the second halving here, quite respectable. 20 R over 13 trades, 61% profitable. Profit factor is quite high, drawdowns low. Expectancy is a nice, respectable sort of 1.57. That's pretty damn good. Take that any day. I'm going to skip the next one for a second and just go to this 1 year after the third halving and note the differences between these guys. 20.4 to 20.2, quite similar over the same trades, 13 trades. Percent profitable dropped on the third halving, which means that we must have got 1 or 2 trades that were larger winners. And that probably dropped our profit factor down a bit, but the drawdowns themselves are still really low, and the expectancy pretty much held at 1.5. So pretty happy there. Now, this one that I skipped is the next 6 months after the second halving. So if I just flick my screen back for a minute, that's this little bit here. And I just thought, I was just curious, we had this nice push up, but then it seemed to continue over the next 6 months. So I just thought, well, what if we just look at that period as a back test in itself? And here's the results we see from that. 8R on the net profit over 6 trades. So about half the trades or a little bit less. 66% win rate. Profit factor is pretty consistent. Drawdowns are low. Expectancy is high. It's a pretty good extension of what we were seeing previously. The numbers are pretty consistent. So that's kind of nice to see. Okay, now what if we pull all these numbers together, except for this next 6 months, because that's a little bit of a cheat. I'm really only interested in that 1 year period. So I pulled all of the data together, just stitched it together into one one group of stats. And a few things I wanted to point out on here. I mean, obviously the numbers are going to be good. We already saw that they were. We can see here on the sequence plot, this is like the scatter plot of the trades. We have these big outliers. This is like an 84 R, that's the maximum trade that we saw, 84. So that's a huge one. And then there's this 30. We got a couple north of 10. Most of them, though, between, say, -1 and 5-ish, which is in this trade distribution here. That's what we're looking at. And I did some quick math earlier, and then if I were to draw a vertical line right around here, everything to the left of that line pretty much washes out to around 0-ish, and everything to the right of that line is where all of the profits are, right? That's like the fat tails of the distribution that we're trying to grab here. So I'm pretty happy with that from a trend following system point of view. This is looking pretty solid. Overall win rate's about half, 51%. But look at the difference between when we win about 9.4 R. When we only lose about minus zero point 0.7. So that's a huge discrepancy, and that's what's giving us a lot of that edge there. Um, we can see that we did get a minimum trade of about a minus 2.88, call that a minus 3. That would be this one here on the block, and that's just kind of good to see. I mean, that means that we took a larger than 1 R loss for some reason, probably on a gap or something strange. But it's kind of nice that that's in the sample. From a average point of view, so expectancy is about 4.5 overall. That's pretty crazy. That's pretty damn good. And SQN is less meaningful because we only have 35 trades. So NSQN assumes 100 trades, and that gives us about a 3 on the NSQN, which is pretty good. You can see that the cumulative R looks nice. We got these big jumps from the outliers, but even if you remove them, we're up and to the right um, across the remainder of those trades, which is great to see. And it's the outliers which is causing this rolling R to kind of look like it's heading down, but just note how high these numbers are here. So pretty happy with performance overall. Excuse me. Um, and really that's it. I'm going to leave you guys with this disclaimer, just to keep our lawyers happy and to let you guys or remind you guys, right, that none of this is advice. This is typically historical looking. We're not trying to make any predictions on the future, but I'm quite happy that I understand the PRX system and how I can run it and manage my own risk going forward, and think that you guys are all familiar with that, I believe, as well. And if you see fit to be able to join us in this, then you can, and please do. All right, guys, catch you in the next one.